Good evening. My name is Amy Bach. I'm the executive director of the nonprofit United Policyholders. I'm so grateful that we were able to assemble a panel of experts to bring you insurance claim guidance for small businesses impacted by the 2025 Los Angeles wildfires tonight. This program is being recorded, so you will be able to watch it again at your convenience. If you miss something and you want to go back, we will have the recording posted in a few days on our website. And if you have colleagues, um, people that work in your organization that you would like to watch it, you can share the information with them that the webinar will be on our website. So a little bit about us. We are a California-based, nationally respected nonprofit. 501(c)(3) means we're a traditional tax-exempt charity. Donations are considered charitable to us. We have a platinum rating from the agency that rates nonprofits. We have over 3 decades of experience, a track record of being useful, and expertise in disaster preparedness, recovery, and insurance law. We're not for profit, not for sale. We don't accept funding from insurance companies to keep our voice independent, but we definitely know a lot about the topic of insurance. We're funded by donations and grants. We have a professional staff, plus an experienced volunteer corps of experts and people who've navigated disaster recovery. On our panel tonight will be two professional experts, and then an expert who's been working in the industry adjusting claims and now is on our staff. Our organization has filed more than 500 what are called friend of the court briefs, amicus briefs, in coverage litigation on behalf of policyholders, and the majority of them have been on behalf of businesses. We're very sorry for the conditions that brought you to be here tonight, the losses that you have sustained, but we're glad that you were able to make time to be with us this evening, and we have worked very hard to curate the information that we're bringing you tonight so that it's really in your best interest. It just help you make good decisions and navigate the challenges of having your business impacted by a disaster of a large scale, and trying to get fair compensation from your insurance company, and get back to business. So the slide deck for tonight is already posted on our website. If you want to follow along on your own computer, you can do that. If you're watching on your phone, whatever works for you. But you'll have that slide deck available to you after the program if you want to go back and check out something. So we run 3 programs at United Policyholders. Tonight's program is brought to you through our Roadmap to Recovery. But we also do a lot of work trying to help people and businesses have the right insurance in place so that if, God forbid, you have a disaster, you're in as good shape as one can be after going through such a devastating event. But as you heard from what I talked about, those briefs we file, we also do a lot of advocacy work. So when you tell us about problems that you're having, if there is a need for there to be a change in the law to make it better for you or people who will come after you, then we will get to work on that. So that's me. I'm a consumer advocate, professional insurance consumer advocate. I've been doing that for a very long time. I'm one of the founders of the organization. I've helped shape our 3 programs. Um, and I'm a voice. I'm a voice for you where decisions are being made that impact you as a policyholder. I'm so proud and pleased to be joined by Amber Finch. Amber is a partner with the actually international firm of Reed Smith. Um, and You can read more about her there. Ever since the fires hit in January, she has been a volunteer supporting the recovery effort in her community, and bringing good information to people who need it. So thank you, Amber. We're also joined tonight by Dawn Lesser, who's the managing attorney of the Lesser Law Group with offices in San Francisco, Sacramento, and the North Bay. He has a long track record of representing counseling small businesses and all size businesses in pre-litigation insurance disputes, as well as coverage and bad faith fights throughout California. His specialty is business interruption, cyber related and other commercial losses. Amber's firm is a huge supporter of our Friend of the Court initiative, through which we are always trying to help shape the law in your favor as a business that has bought insurance. Dawn has contributed publications to our publication library. So I'm just really, really pleased to have both of them with us. We're also joined by Alexis Ricci, who is on our team after having served 25 years, served, I don't know if that's the right word, but 25 years of experience in the property and casualty insurance claim arena. She's a licensed public adjuster in California and many other states. And she is dedicated to assisting policyholders and advocating for fair insurance practices. So a quick reminder, this workshop is intended to be general guidance only, not legal advice, although 3 out of 4 of us here are lawyers. Um, we don't endorse or warrant any of our volunteers or our sponsors, but obviously we do our best to bring you volunteer experts who know what they're talking about and have a heart for serving consumers. So we appreciate them volunteering their time. So I'm going to go through a few best practices, and then we're going to talk with our panel. We're going to answer the questions that were submitted before the event, and then we will talk about some of the topics that we'll touch on in our slides. So what do we recommend? We recommend that you recognize reality. When it comes to insurance, ads are ads. Your insurer is not your good neighbor or your friend. They're a for-profit company, which means that they are going to be motivated to limit their payouts. A lot of insurers are publicly traded. They have shareholders they have to be accountable to. They also have their own operations that they have to keep going. And so, although they advertise in one way, reality is we want you to think about your claim as a business transaction. We recommend being politely assertive. Um, you get more flies with honey, although we don't want you to be a pushover, right? Because we want you to learn. That's why we're here, to learn and enforce your right to recover all the funds that are available in the policy that you paid for. So we say expect the best, but prepare for the worst, meaning your claim may go smoothly. We certainly hope it does. But we're here to help empower you so that if you're not getting treated fairly, or if you're not getting prompt answers, or if you're not getting fair settlement offers, that you get the information here tonight that will help you get your claim on track. We do recommend, or I would even say insist, that you work from a complete and current set of policy documents, right? Not the policy that was in effect last year, but the one that was in effect in January at the time of the fires. That means all the papers that came with it, endorsements, riders, those extras that came with your policy, including your what are called your declarations pages that sort of lay out what buckets of coverage you have and don't have. And then the last thing that is incredibly important is to document. Be that that organized person that you may not naturally be. And a lot of small business owners, you're busy all the time. But here we really recommend keeping a daily journal. Put things in writing, updates, phone numbers, names, titles, conversations, that who said what to who, what's been agreed to, what's still open, and keep that journal daily if you can. We know that for a lot of people that go through a disaster, you're not at your most mentally sharp, right? You're dislocated, you're traumatized. It's just another reason do that record keeping. And also because you may be dealing with more than one adjuster and you don't want to constantly have to start from scratch. More best practices: don't guesstimate the value of what was damaged, destroyed, or lost, right? Documentation and facts are what matter. We say trust but verify, right? Review those estimates and reports created by or for your insurance company, but add or correct them as needed. Don't take them as gospel without getting a second opinion on those valuations, right? And that means finding independent experts. Consider hiring your own professional experts, a forensic accountant, a CPA, a public adjuster, attorney, or a construction consultant, depending on what your situation is. And we know that's easy for us to say, but it costs money, and money is what you need when you've gone through a disaster. If you have claim preparation coverage in your policy, that's should help you cover some of those expenses. And then finally, aim for a complete and accurate inventory of all damaged or destroyed property along with your lost business income. So your focus should be on really getting your arms around the value of what you lost. Um, and that, is where you want to keep your focus. What are some of the claim problems that small businesses have after wildfires? Policy language that limits coverage or sets deadlines. Inadequate coverage under insurance. That's one of the big ones, right? Not having enough coverage for the period of restoration, how long it's really going to take you to get back to the level of profitability where you were the day before the fires, right? Having limited coverage um, and damage valuation estimates, right? Your insurer says it's the rebuild of your facility is going to cost X, but the real life vendors that you'd have to actually pay to do the work are telling you why. And so that's just super common. That can go to the rebuild repair costs, that can go to the value of your inventory. The disputes can also go to your lost profits, etc. Documentation, delays, denials based on missing or inadequate loss documentation. Your insurer will say, why don't you have this record or that record? Well, you're a small business. Very often, you're focused on serving your customers, delivering your products, not necessarily keeping meticulous records. Good or bad is just a common problem. Um, Also, period of restoration. Very often, your insurers and their adjusters will have unrealistic notions of how quickly you should be back online. There are unforeseen delays, supply chain issues, permitting delays, contractor shortages, all those things. And then substantiating your income loss. That's the big one. What your pre-loss revenues were, excuse me, um, what the marketplace conditions are or were. So let's start with typical policy deadlines. Dawn, what are the common policy deadlines that you'll find in a business owner's policy?
So there aren't a lot of specific deadlines that say, you have to do X within a certain number of days. Most of the deadlines are expressed in terms of uh, responding promptly to requests for information, being diligent about getting your business back up and running, being diligent about making repairs. There are a couple of deadlines that always come up. One is your policy has what's called a limitation period in it, and typically that period is either 1 or 2 years. It runs from the date of your loss, and uh, by the wording of the provision, it says you can't sue them if you don't sue them by within either 1 or 2 years of the date of the loss. As a practical matter, what that means is that you need to get your information in and make your claim uh, and push it forward uh, diligently. That those 1 or 2 year periods are suspended while the insurance company is investigating your claim, but that's sort of an outside deadline in terms of pursuing your claim. Um, there are uh, there are a couple of deadlines that may or may not come up. For example, if the insurance company asks you to complete a document called a proof of loss, you have 60 days to provide that once you're asked for it. But other than that, the deadlines are more in terms of your obligation to uh, diligently move forward with repairing your property, replacing your property, and getting back up and running.
Thank you. Amber, anything to add to what Dawn just offered?
Sure, and thanks, Amy, for the opportunity to be here and speak with everyone watching. I think the main thing, and one you will hear us say over and over tonight is read your policy, because the language does matter. There are several policies out there that don't necessarily have deadlines, and there are many more that do. And so it's really incumbent upon you to be familiar with the language of your policy in the first instance. And that's why it's important, as Amy talked about before, make sure that you're working with a complete and current policy. Because if you do have a situation where you have a 60-day proof of loss deadline, you want to make sure that you're getting in that information within the timeline. Sometimes it's 30 days, sometimes it's 90 days. I mean, it really, really depends on the language. The insurers, if it's in the policy, the insurers are going to press on that date. And so you want to make sure that you're looking at any timelines or any deadlines that are specified in the policy. And if there's any concerns about meeting those deadlines, making sure that you're communicating with the insurer to ask for extensions or to say that we're working on them. We're providing, here's what we know now, but we reserve our right to supplement this at a later time as more information becomes available.
Yes, thank you. And emphasizing cooperation, we're going to be talking a little bit more about that as we go because it is important. That you as the policyholder are always wearing the white hat. Whenever when the insurer asks you for information, it's very important that you not ignore it. We'll talk a little bit more about that as we go. So, captive versus independent experts. How can a small business owner tell if a contractor, estimator, remediation vendor, or business valuation expert hired by their insurance company is trustworthy? And why does that matter? Let's start with you, Amber.
Sure. I mean, a couple of things to keep in mind here. Generally speaking, the goal is to make sure, the insurance company and the insured here have a shared goal was to ensure at the end of the day, you're restored back to your original status quo. So you can start there. The insurance company doesn't want to be in the business of hiring experts that are not trustworthy, that don't have the necessary qualifications. But unfortunately, sometimes, just like any other vendor out there, they may slip. So the good thing is, we have so much access to information nowadays. You can ask your insurance company directly for information on their quality, what their ratings are, et cetera. And then you can also look them up yourselves. You can ask just as you would hire your own vendor and do the due diligence on that vendor, anybody you hire, I would say take those same approaches in checking out the qualifications, the track records, et cetera, for any expert or vendor that the insurance company hires.
Thank you. And one of the reasons that we wanted to talk about this topic is, for example, in the smoke remediation context, there often are sort of two camps. There's the experts that work on the policyholder side, and then there's the experts that work for insurers, and they often just are on one side or the other. That's not the case with all types of experts. Dawn, what would you like to add on this topic?
So, a couple of things. One is, I think it's important to understand that as a general matter, the vendors that the insurance company hires to investigate your claim and determine the extent of the coverage that's provided, those vendors have, for the most part, long-standing relationships with those insurers. They are dependent on those insurers for their business. They get volume business from them. And so even though those folks may be, ethical, competent, experienced, it's unrealistic to assume that they are going to be completely objective about their claim, about your claim. And so it is worth being a little skeptical about what you hear from these folks, and in terms of making sure, trying to make sure that they are trustworthy and doing a good job. You want to pay attention to the work they're doing while they're in your presence. If they're coming out to inspect your office for damage, pay attention, make sure that they are inspecting the entire premises, make sure that they're looking for damage and not just, rushing through without looking for all the damage that may be there. Ask them questions. Ask them to explain what they're doing and why and what they're looking for and what they're going to be reporting to the insurer. Um, and then, you can also ask these folks for references. I mean, if they are vendors working for the insurance company, that's one thing. But if these are folks that are, either recommended by the carrier or on a list, or even if it's somebody you're hiring yourself, of course, asking for references is one good way to find out how they've served other people.
Yep.
So I don't know, those would be a few points I would make.
Yep. Yep. Okay, so just a quick review of what your rights are as a insurance consumer or policyholder, same thing. Um, your insurance company and its representatives should promptly and thoroughly investigate your claim. That's California law. Follow California law and regulations. Advance funds as soon as they are clearly owed. Only require you to gather a reasonable amount of documentation. Work with you to determine the amount of your business income loss and keep you apprised if there are upcoming policy or legal deadlines. Um, so your insurance policy does require you to cooperate, and that means provide documentation upon request and mitigate damages where feasible. And that means avoid additional damage, right? So that could mean relocating or migrating to some online services if you can, if your physical plant is not usable. Things went back in the original COVID kind of lockdown period, a lot of businesses were experienced in trying to be creative about keeping their doors open. Obviously, there are limits to your obligation to do that. But the reason that we emphasize cooperating is because, the one thing that, in juries and courts and in general, the public, it's not like insurance companies are the most popular people in town. But fair is fair, and if it looks like the policyholder was hiding the ball or made it hard for the insurance company to do the right thing, that's not going to help. So that's why we emphasize how important it is that you cooperate and that you confirm in writing that you're cooperating. That doesn't mean bending over backwards to give them the same thing 4 times that you already gave them. But that means, confirming in writing, well, we did provide you with such and such documentation on such and such a date, and that just documents your cooperation. So your main buckets of coverage will be your building, business personal property, business income, and extra expense. Remember that lost property, physical objects, and lost earnings are treated separately. There's different monetary and time limits for each coverage bucket. And there are potential exclusions that you're dealing with, limits and requirements. And then there are 2 ways that losses get valued and paid, depending on the way your policy is written. Replacement cost is what it will cost to put you back in your pre-loss position, right? Um, Actual cash value is what we often call the Craigslist price, which is what a willing buyer would have paid a willing seller the day before the loss, and or the condition of the property at the time of the loss, right? Age, wear and tear, that kind of thing. Different things are valued differently. So there are limits to being cooperative. So, Amber, does cooperate mean giving the insurer everything it asks for? What about your tax records?
So answer to the first question is absolutely not. I mean, normally what we find is that the insurance company usually asks for more information than they really need to determine the coverage decision on your claim. So, all that said, I mean, we want to keep cooperation in mind. We want to provide what is necessary for them to investigate the claim, i.e., was there a loss? What's the date of the loss to the extent that you can provide that information, and what's the extent of the loss? What are your damages? What's missing? That type of information is critical for the carrier to understand and investigate the claim. But do you need to give them every slip of paper in order for them to get to a decision as to whether A, you're covered, and B, how much is owed? No. With respect to tax records, I mean, there are other financial documents, for example, that provide the same information that tax records would provide. And in those instances, I usually advise my clients that we don't provide tax records unless it is absolutely necessary. Instead, the more common pieces of financial records, for example, when we're dealing with business income losses, are going to be, your internal financial records, your P&L, your income statements, for example, your balance sheets, because those are going to give you the idea of how much how much you actually lost based on the historical performance of the company. So you don't have to provide tax records, which provides them much more, frankly, private information that is necessary for a carrier to have.
Yes. Dawn, anything to add?
Um, I don't really have much to add to what Amber's already said. Legally, they are entitled to ask you for your tax returns within some narrow band of the time period that's relevant. But in my experience, they rarely do ask for that. And when they do, it's usually because they think there may be a fraudulent claim,
Yep.
at which, should tip you off that you need to go and get some professional help. But generally they don't ask for them and shouldn't need them. Um, Beyond that, I would just say that um, cooperating with their investing, giving them the information they are asking for is generally a good idea. And it's generally not a good idea to get in a fight with them about what they're asking for, unless it's imposing such a really difficult burden on your ability to run your business and to recover that it becomes a huge problem. Otherwise, I think you earn some goodwill with the adjuster by being cooperative and providing the information that they're asking for, even if it may be a little more than you think might actually be relevant.
Okay, fair enough. I'm going to spring a question on you, Alexis, from your adjusting days. Um, were there sources of alternative financial documentation that you could come up with if, for instead of producing a tax record?
Yeah, and a lot of people, have small businesses, so they're claiming their business income on their own personal taxes. So I completely agree with Don and Amber that there are other alternatives. Your sales reports, your profit and loss statements, just like Amber was saying, those are great. Those are really useful for your adjuster. A lot of times, just having an open dialogue with your adjuster about how you run your business. How do you track your business records? Do you have an outside accountant? Do you use a bookkeeper? Are you still writing things down on a paper ledger and all that burned up? Um, there's so many different alternatives that you can utilize to come up with those end results of your income loss. It's really just about that communication, that cooperation, and there is no set documentation that the carrier absolutely relies on to quantify your loss.
Okay, thank you, all three of you. Okay, so this was a pre-submitted question. Um, what about those who didn't have insurance to cover their home businesses, which is so common? My husband's a general contractor. We had business insurance to cover his general liability, workers' comp. We had home insurance, but we found out that our home insurance didn't cover anything business related, yet everything business related burned, as our home was a total loss, work truck, business tools, material. So um, do we have any recourse here? So Dawn, you want to take a stab at this one?
It's a very difficult problem because almost all homeowners policies contain very clear exclusions for business related property. Um, Couple of things. One is there are policies out there that provide a certain limit of coverage for business property. So be sure you have a complete copy of that policy and consult with your agent or your broker. Make sure that find out what coverage there may be, because there might be $10,000, $15,000 worth of coverage for business property. The other thing I would say about this is that it's not always clear what is business property and what's personal. I've had some clients who have had this situation, and if you can prove that some of this property that you may use in your business was bought with your personal funds, that might get you over the hill with the adjuster. So look at least for some evidence that you paid for these things with your personal funds, or other evidence that it's more personal than it is business.
Thank you. Alexis, this one's going to go to you. And it's very similar. My business
Mm.
didn't burn down, but my house did. And in my basement, I not only held supplies, um, and specialized testing equipment, office files and records. I haven't even considered contacting my business insurance because I always thought it was for the actual business location. Should I submit a claim for these business property that was stored at the home?
Yeah, my advice would be just as Don said, and piggyback, typically there's a limitation on business personal property with your homeowner's claim. So definitely start there with your homeowner's claim, see what coverage you do have, what those limits are, and certainly contact your agent or open a claim with your business policy. Whether you're going to have coverage or not for that property that you lost at your home is really going to be dependent on how that policy, your business policy, was written. Typically, your business personal property is covered at a scheduled location. So if your home was an additional scheduled location as part of your business policy, you very well could have coverage there. But until you actually secure that policy, all of your endorsements, and especially your declarations page, which will show what locations are scheduled, you're not really going to have answers to that question of whether you've got the coverage. So start the process. You can always close the claim if it looks like you don't have the coverage, and then certainly talk to your agent about future coverage if you're going to do that again when you rebuild and have things at your home.
Thank you. Okay, this is right along the same line. Amber, if I was storing business property at my home, but my insurer is excluding all of it, can I sue the agent or broker who sold me the policy for not procuring me the right coverage?
So I'll answer it this way. At like my law school professors told me, you cannot stop anyone from suing you at all. So you can sue anybody you want to. I think the question is whether, what's your chances of success on claims like this? And really the answer is it depends. When you're looking at agent or broker liability, it's usually judged at the time of the placement of the policy. What were the instructions in the procurement? Were you communicating with the agent and the broker that, hey, I have a business. Sometimes I keep my property at home. But the broker failed to include your home on the schedule of locations, for example. In those instances, you have what you can quantify as broker negligence, right? There was something about the broker's acts in negligence in procuring that policy based on the information that you provided. Or if, I mean, and the easy one is if you told the broker to ensure that I had coverage for property that was stored at home and they failed to do so. I mean, that's an easier case.
Yeah.
But the point is to look at the answer to that question is looking at what happened at the time that you purchased the policy and what was the information that you made or gave to the broker and the agent in terms of identifying the right coverage for you.
Yeah. So, Dawn, in the context of home claims, where so many people, 2/3, according to United Policyholder surveys, come up underinsured, they don't have enough coverage. We've done, we have offer a lot of information on that, what are the circumstances that will allow you to get a remedy when you're underinsured, and that the law is not great for the policyholder in terms of, there being just a general duty to procure coverage, not that special duty to procure adequate coverage. Is the law the same for small businesses where it really, you've got to establish very specifically that your agent or broker made a very specific promise to you about the adequacy of your coverage, or is the law a little different for commercial versus residential?
Generally speaking, it's the same, and that's because the rule in many people are surprised to learn that when they go to buy insurance through an agent or a broker, the law says that that agent or broker does not have an obligation to make sure that you get the right cover, get the coverage you need.
Right.
And so what Amber was saying is right, which is that you may have a claim if you either told the broker, I want to make sure that my home business is covered, or I want to make sure that I've got enough coverage, if my business is shut down for 6 months. And if the broker says, okay, I will do that for you, then you've got a claim. But otherwise, these are very tough claims, and they are pretty much as tough in the commercial side as they are on the residential side.
Okay. Thank you. I do want to let the audience know that the chat is open. So if you have questions that we haven't answered, you're welcome to put them in the chat. Okay, Alexis, in your experience, how many adjusters will a small business claimant typically have to deal with on a wildfire claim?
I will tell you that you will have less adjusters on your business claim than you will on your homeowner's claim, just straight up. Typically, you will have one adjuster who kind of oversees and manages the whole entity of your business claim. And then they may bring in other either adjusters or specialists to help out with various components. So if you've got a building loss, the carrier may bring out a consultant who acts as an estimator to evaluate your loss there. If you've got business personal property loss, that might be another adjuster who does work in-house with the carrier, or it's a totally separate company that is working in conjunction with your carrier to quantify your business income, or excuse me, business personal property loss. And then typically, if you have a business income loss or extra expenses, the carrier will have a forensic accountant working on calculating that loss and working with you and even your accounting team or staff. So it's really like one person, and that should be pretty consistent across the board. It is a lot more work invested on the carrier side to help you calculate your loss, and they want to try to stabilize that connection for you as a business owner. But you might have people working on various facets in limited capacity for your claim.
Great. Thank you. Okay. Amber, does a small business always need to hire help to get their insurance claim resolved fairly, or can some small business owners handle their own claims? And what are some of, your observations on that?
Sure. I mean, I think the answer is no, you don't always need to hire help. Ideally, when you go into the transaction of purchasing insurance, at the beginning, right, the relationship is an aligned one. The idea is that your insurance company is there to protect you and to help you in your time of need and in your time of loss. Um, if, however, you have a large loss or you need assistance with putting together your claim because either you don't have the capacity internally to be able to calculate your business losses, what a business income loss might be, what your extra expenses might be over the time of the period of restoration, let's say 12 months. If you need assistance with that, I think in those instances it's advisable that you do hire help there to help you put in a position that your best claim forward, especially if, as Don mentioned earlier in the program, you have provisions in your policy that provide coverage for claim preparation expenses. In that instance, you essentially it's not money out of your pocket to go and get help to help you put the claim in.
Yeah.
So I would again go back, look at your policy, see if you have that coverage, any type of claim preparation help, accounting assistance, even sometimes they cover attorney help. I would take a look at what your policy allows for coverage and then look at whether or not you need to hire that help to help you with your claim.
Yeah. Okay. Anything to add on that point, Don?
I think it depends on how much is at stake and whether you've got the internal resources to pursue it. I typically recommend that where possible, if it's a substantial business interruption claim, that the policyholder get some help from an accountant who is experienced with business interruption claims, because a lot of CPAs, they may be fine to prepare your taxes or to keep your books, but there are issues that come up in these business interruption claims that most CPAs are not familiar with and won't be situated to really advocate your position on some of these issues. So I would say where possible, at least on the business interruption side, if get some help. It may, you might be able to just meet with somebody for a half a day and get some advice on what the issues are and how to pursue them. You don't necessarily have to pay them, for hours and hours and days of work.
Yeah. Yeah. Thank you. So proving your losses, your claim, um, providing evidence and documenting your losses, the more that you can provide, the better. Staying organized, we're sort of reinforcing some of the things that we talked about earlier. Consider setting up a dedicated email address or bank account just for your insurance claim. We know you're down the road a ways since January, but it's still not too late to do that. And then be prepared to explain discrepancies in your income, seasonality fluctuations, especially if you have a business with income that varies throughout the year. And then again, be cooperative but firm. Respond timely to questions and requests for additional documentation as long as they're not unreasonable, duplicative, or unrelated to your loss or claim, right? So for documenting your building loss, you can help expedite your claim settlement by submitting the following things: plans, records, and invoices, California specific ADA or code compliance documents, professional damage assessments, particularly in the case of businesses that have had smoke damage. Very important that your facility get tested by somebody who knows how to do the tests and where to do the tests, and that the remediation plan is based on those test results. And then rebuild or repair estimates from local reputable sources, the actual people that would do the work. So here's a question from Diana W. I received an insufficient rebuild estimate from State Farm. How can I fight back? No contractors have responded to my request to quote a rebuild. So Alexis, I'm sure you've never heard this scenario before.
No, this doesn't happen at all. This happens on a probably 100 out of 100 claims. The first get-go from your adjuster is not going to include everything, and it's going to feel insufficient. Check with the check and the languaging on the check, but typically how it works is once the carrier knows unconditionally that they owe you for some of your damages, they will cut a check as quickly as possible. Just make sure before you cash that check that you are not cashing a full and final settlement valued check. But what you really want to do is you're going to have to do some due diligence. You're going to have to take that big weighted document from your insurance company and spend some time looking through it. You want to make sure that the right damages were included, the right repairs, the right building square footage, materials used. If you have been reaching out to contractors with no feedback, no calls back, that's pretty common right now. Everyone is really, really busy. My advice would be to try to set up a phone consultation with your adjuster first and foremost. Again, polite but assertive, and ask your adjuster after you've done your first push through this estimate to explain things. Notice what is missing, notice the inconsistencies, and have your adjuster go through that. And if your adjuster does not want to take the time to do that on the phone, then memorialize it in writing, push it out to your adjuster to address the things that you find incorrect, inadequate, or just completely missing, and start there. And if that process back and forth, because it will be a process of changes and it will take time, if you're running into a stuck situation, my recommendation would be to look at professional help, whether that is paying a reputable general contractor who is well versed in insurance rebuild estimation, for their time to review the estimate or for an estimate, or even, you might need legal help or a professional, public adjuster to help through this process of adjudication. Your estimate is everything. This is going to set the standard for how long it's going to take to rebuild your property, what you're entitled to monetarily. It's going to affect your business income loss. There is so much at stake. You want to get these numbers right. You want to get the scope of rebuild correct out the gate, and it may take some time. It may take some professional help as well if you can't do it yourself.
Thank you. So documenting your business personal property loss, detailed inventory, you got to do it. Proof of ownership or lease agreements, you got to dig up those agreements, those contracts, establishing the value, and then professional expert assessment. So these are the considerations for how you prove what you lost and what it's going to cost to put it back. Okay. Forensic experts. Amber, what factors or conditions lead you to advise a business client that they need to hire an outside expert to document their business loss?
Sure. I mean, first and foremost, I think it goes to if you believe that you have a large loss, in that instance, it is almost always more helpful to hire a forensic accountant in that instance to help you calculate, to Don's point, from a business insurance claim perspective, what those losses are. I have found in every instance in where a forensic accountant is hired, your claim valuation usually goes up because there are things that you may not have considered, or you might be underestimating an income loss when your actual documentation reflects something larger, or there's a bucket of extra expense that you didn't even think about because, again, remember, when you are in the context of the loss itself, it can be very chaotic. And there's a lot of things that you're just, can I think about off the top of my head, as opposed to someone who's neutral and is thinking about it much more methodologically and is looking at it from this is what they do day in and day out, which is, do the accounting side. So in a large loss, I would almost 100% of the time recommend that you're hiring at least a forensic accountant.
Okay, thank you. So So I was, in the interest of time, I'm going to jump to the business income part because I think it's a little bit more of the soft spot. So, Dawn, you were talking about some of the challenges that when we were prepping that some businesses are having with their business income claims due to the conditions around where the business was. So, what factors or conditions would lead you to advise a business client that they need to hire an outside expert to document their income loss?
So again, I think on one level, it's kind of a, cost benefit calculation in terms of the amount of your loss versus what you're going to spend to get that help. But just as an example, typically the way the insurance company will calculate the business interruption loss is they will look back, they'll pick a period prior to the loss and look back at that period and calculate your average net income for that period. And then they'll say, all right, we're going to use that average to project what you would have lost if this fire had, or what you would have earned had this fire not occurred.
Right.
But that's a starting point, not an ending point, because many businesses have many businesses have different, characteristics that make that average an incomplete way to calculate what you would have earned had the loss not occurred. For example, you may have just hired some additional people who were about to come on board when the fire happened. And so, your financial history is not going to provide a complete picture of what your income would have been. Seasonality is another issue. You're going to want somebody to advocate to the carrier, what it is about your particular business that requires, maybe going back 1 year or 2 years or 3 years and not just 6 months in calculating what that pre-loss average was. And so, those are just two examples of issues that really need to be paid attention to if you're going to get what you're entitled to, and not just what the carrier is going to say you're not what the carrier is going to say your loss wouldn't have been.
Yep. Okay. So for business income loss, you've got the period of, these are the key terms, right? Period of restoration, suspension of your operations. In this context, and this one I'm gonna throw to you, Alexis, in the context of the LA wildfire claims, what are some of the considerations for an impacted business in terms of what they have to prove for the period of restoration, and yeah, what's kind of the core of what matters here?
Yeah, I mean, it's all situational too. It depends on are you a tenant in a business and that building burned down? Well, then your period of restoration is not just potentially you rebuilding and relocating your own personal business, but it's like the building that you rented and leased. If that was a place that you had done business for 15, 20 years and you like that foot traffic, you want to go back, that period of restoration for you may be very contingent on what's going on with that building. The big thing is you do, as a business owner, need to mitigate your damages. So if that means you need to move somewhere temporarily until that building can be rebuilt, then those are things that you need to do. So again, it really depends on your own personal business. You cannot just say, hey, I'm in a business in an area that was partially hit by a wildfire. I'm going to claim a business income loss. Or I have business personal property loss. You've got to have physical damage. You've got to have a suspension of your business. There's got to be some reason that you can't maintain your business that is directly related to this wildfire. Not a market condition because everyone has left, but you've got to have physical damage. Correct me if I'm wrong, Dawn and Amber, But that's the big gist with the business income loss. You can't just extrapolate that you have a loss because everyone around you was affected by the wildfire. You've got to have and show that you have a loss physically.
Yeah, well,
And
there's two
that's,
pieces to it. There's the physical damage has to have caused you to suspend your business. And then the suspension has to result in you losing income.
okay. And so in the case, let's say, Amber, I'm going to throw something at you here. We had friends that had a restaurant and they weren't doing that well, and there was a fire. And of course, the insurers just thought maybe they might have had something to do with it, but we're talking about wildfires here. If a restaurant was not doing that great before the LA wildfire, is that going to make it harder for them to establish the business income loss?
So that's where I think the rubber meets the road here, right? Is you're oftentimes in a business income situation, when you're trying to calculate the loss, the insurance company is looking at historical performance.
Right.
So we are going to, and we do see a lot of situations where the question mark right now is for those in the restaurant business, if they were impacted by COVID, for example. And so they have a lower revenue basis point to start from, then should the insurer use that lower number to calculate their future income, and as it would be their business income loss. And that's where it's important in those instances, I think, to really talk. That's when you need help, right? That's when you need to communicate with your forensic accountant or your attorney in that instance to be able to communicate and tell the story and the narrative. Because oftentimes we might see a business that's on its trajectory and it's going back up. And from that perspective, the business income loss calculation should be higher, and you
Right.
should be looking at the future anticipated business income loss, which is in fact what is covered, as opposed to using lower historical performances to calculate that loss. But that's where I think, you're going to see some issues, and getting help is much more valuable to the insured than to try to do it by themselves, because there are going to always be two sides of the coin, and you want to be in a position to have your best foot forward in your claims.
Right. And I think for a lot of small businesses, it's a very personal operation, and you need a third party to say, no, I'm going to say how it is, not, take it. You don't have to take it from me, the owner, who's put my blood, sweat, and tears into this thing. Somebody who's impartial looking at it is going to be helpful to you to establish the accuracy of what you're saying, right? Alexis, in your experience as a professional claim adjuster, what are some of the biggest challenges you saw in terms of small businesses' ability to prove up their business income losses?
Yeah. So everyone has a passion. People get into business because they have a skill set, they want to help someone. And there are always facets of a business that people love and, let's call it, hate or not good at. There are a lot of times where you're not really good at doing the business part of it, the record keeping, the numbers. And so that might be harder, or you're old school and you love to do things on paper. So that is a challenge too. If you are not technologically savvy, you're old school, it's going to be a little bit harder to validate your loss and come up with that game plan with your adjuster on what kind of records you can get, how can you substantiate your loss. A lot of times things would come up where you would have a big inventory and no way to prove that you actually purchased a lot of those things. A lot of things were cash payments, or fell off the back of the truck kind of thing. I don't want to sound illegal or things like that, but it was just substantiating how your inventory, how, if your book of business is not very large and healthy, how did you afford all of this inventory? How did you afford all of this equipment? How did you pay for those things? So your dialogue, your narrative, and your documentation didn't coincide sometimes. A bigger problem too would be a newer business, a business that has not been around, a brand new established business, or someone who is very seasonally dependent, a caterer, for example, who goes in not necessarily for the LA fires, but even so, expects her spring, his or her spring wedding, spring events to come forward, has all these potential bookings or a marketing plan in place to secure bookings. How do you explain that to your carrier? How do you justify those numbers, that increase that you knew was going to happen because it was just that time? So those are challenging items. That is definitely when I would advise you, even on the carrier side, you may want to seek some professional guidance to help you through that while you're getting back into the whole concept of reestablishing your business and keeping that going.
Thank you. So we're just going to go over a few of the key phrases, and then we'll be wrapping up. So the period of restoration, we've already talked about it. Basically, when should you be back in operation and back up to where you were before the loss, right? But for the loss, right, where would you be? Common problems, establishing a repair period if you're a tenant, unforeseen delays in reconstruction. Obviously, there's a lot going on right now in LA, with access and permitting, and disagreements between the city and the county and all that stuff. Supply chain delays, and then your insurer may push back if they say, well, you're not moving fast enough, right? Calculating your business interruption loss. We talked a little bit about it, but the typical formula is your net profit or income that you were earning, plus your continuing expenses, um, minus your actual income incurred, um, and minus your non-continuing expenses equals your business income loss. Um, so as far as an insurance company adjuster's role in calculating your business interruption loss, Amber, what's common? Does the adjuster do it for you? Or do you do it on your own?
Look, you are responsible for, in the first instance, determining what your loss is, providing an estimate, a proof of loss to the carrier. The carrier is going to do their own calculation. And as we talked about before, I think it's certainly in your interest to make sure that you are looking at that large document, that detail, that calculation, to see if there are any mistakes. I also think that you should be doing it yourself, whether that's you internally, meaning your own financial department, or if you have your own forensic accountant. Very rarely are we relying solely on an insurer's calculation of your business, right? It's your business. You understand it. You know what the loss is. And the goal is to, again, maximize your claim recovery to the extent possible.
Thank you. So continuing expenses, that you can't, you have a relationship with a supplier that you can't get out of because it's a contract, right? That are necessary to keep the business going, that would be incurred regardless of whether the operation is active or not, and then helps preserve your business for eventual reopening. These are just some of the common continuing expenses that you may have. Fixed occupancy costs, utility charges, personnel, financial obligations, professional services, industry-specific expenses. Then there are your non-continuing expenses that typically stop or are reduced during the business interruption, such as the cost of goods sold, labor, operational expenses, and industry-specific expenses. Alexis, which expenses do insurers most commonly dispute? Continuing, non-continuing, or seasonality?
They're going to dispute everything a little bit. Okay. So just be prepared for it. If you've got the documentation showing you paid this much for your rent, they're not going to dispute that. If you've got expenses and you've got your wages for your key employees and you've got documentation, they're not going to dispute it. If you're saying all of a sudden you still need to pay for all of your inventory, but you have nowhere to store it, you're not selling anything, you're completely out of business, but you're still buying and buying and buying, they may start to question that. To Amy's point, if you have a supply contract, that might be a different issue. But a little bit of everything. Seasonality is one of those that is a little bit harder to prove, especially if you're a new business and you will have a seasonality impact. So just be prepared. Like Amber said, you know your business better than anyone else, your narrative, your story to explain how you run your business, who your clients are, what is reasonable accommodations for, an alternative location to keep you up and running. That is golden to your adjuster, and that is worth multiple conversations if need be, just so you guys can create a game plan to get to a common ending place. And always, as Dawn and Amber said, the common ending place is to make you whole as if this loss did not happen. Not better, not worse, but to try to make you whole.
Thank you. I think I was a little optimistic about how quickly we were going to get through this deck. So please bear with us. We've got great content and we're going to keep going. This is just a little bit more detail on seasonality. Dawn, what time period is considered reasonable for a business to get back up and running? And how does the condition of the neighborhood and the marketplace factor in? Oh, you're on mute. Dawn, we can't hear you.
There we go.
There you-
Sorry. There is no particular reasonable time. It is very, very fact specific. It depends on the business. It depends on your suppliers. It depends on your landlord, if you're a tenant, and how long it's going to take to get the building back into operation. So there's no particular time. What's reasonable is the way we assert it is what's reasonable is for the policyholder to be diligently pursuing their recovery, both in terms of doing everything they can do to get their office or their store back into operation, and doing everything they can to mitigate that loss by relocating, finding a temporary location, selling online. If you are doing a diligent job, then in our view, that's reasonable. In terms of the condition of the neighborhood marketplace, how that factors in, more and more policies are now including an express exclusion for income that you lose because, and it's apropos of a wildfire situation. They are including, they're putting in an exclusion for loss that results from essentially the loss of your market, right? So if you had a store in the Palisades and you've got your loss of income claim, well, part of that is going to be pretty clearly the result of the fact that your store was closed and it's taking some time to rebuild. But then after that, you're probably going to continue to have a pretty significant loss of income, but you can expect the carrier to take the position that that's the result of, lower foot traffic in the Palisades or lower foot traffic wherever you may have been located. And so you're going to, this again is another reason to have some professional help, because that's a dispute that's going to involve some pretty big bucks, and is going to require somebody who's experienced in dealing with that sort of issue and can marshal some facts and evidence in your favor.
Thank you. So this is just some information. This is a typical policy language that you'll see on resuming or continuing your operations. If you decide you can't take it no more and you're not gonna resume, then obviously there's going to be an adjustment there. Extra expense that you incur trying to get back into business as quickly and reasonably as possible has to be reasonable and necessary. And there is a policy language that is typical that you'll see for extra expense. These are some common types of extra expenses. temporary facilities and relocation, expedited expenses, cleanup and restoration, and that includes hygienist testing for smoke damage, and then operations continuity and customer relations, compliance issues. This is a link to, we have a special smoke damage resources section of our library, where online, where you can see what our guidance is for the order of, if your business facility has been exposed to smoke and or debris from the wildfire, your insurer should be working with you to retain reputable and qualified professionals to do the following: thoroughly inspect, measure, test, and assess. And that means, as you heard somebody say earlier, not just looking in the obvious places, but looking in the hidden places, the nooks and crannies where there may be particles that were blown in by the wind. Prepare a remediation plan that's based on those testing results, what they found. And then 3, do the work, have somebody do the work that's called out in the plan in a timely way. And then 4, conduct post-cleaning testing to confirm successful remediation and restoration, safe indoor air quality. Why does testing matter? Because it should be the basis for the cleaning plan. And that does not always, this is not the order that a lot of you may have already experienced. You may have had your insurer send somebody in without any testing and do some cleaning. And so what we're giving you is our recommendation for best practices, right? The pre-cleaning inspection and testing, the scoping and pricing a plan, doing the work, and then making sure that the work was successful. But if the post-cleaning reveals problems, then you have to continue to be that politely assertive policyholder who does not accept a subpar cleaning from your insurer. These are just a few of the references to your legal rights that you'll find on our website. These are the types of professional help that we've been talking about here. A licensed attorney, that's a percentage. Those are people who work on contingency. There's also attorneys who work by the hour. There are small and big firm lawyers that are working by the hour. A licensed public adjuster, the fee range is about between 7 and 15. Most people are paying sort of about 10 these days. Forensic accountants, they get paid by the hour. Same thing with a CPA. Industrial hygienists, indoor air quality folks, they pay on a flat fee basis. They will charge on a flat fee basis. And the same thing with construction estimators. They will either do a flat fee or they will do hourly. This is just a link to our professional help directory where you will find these categories: attorneys, cleaning and damage people, construction services. These are people that support our organization. We are not here to say those are the only people you should talk to, but we're here to say that those are the professionals that support United Policyholders and the free education and advocacy work that we do. These are just some resources that you may not be aware of, or you may be coming up is this LA County Economic Development Course Small Business Recovery Center pop-up on August 7th. I would recommend that as something to consider if you are short on your funds. You didn't apply for an SBA loan, you should check out the Jewish Free Loan Association. It might be a better interest rate than you'll find from a commercial lender. If you can't find the answers that you need on our website or the recordings or tonight, you can use our Ask an Expert forum. It's free. Don't expect a super fast answer. I want to acknowledge and thank our donors and funders, the 4 entities that are funding the work that we're doing in the LA wildfire area. I just really want to say, I mean, Amber, to get an expert of your stature and your quality, here giving away information for free, we really appreciate it. Same goes for you, Dawn. Amber, is there anything you want to say in closing that we feel like we skipped over? This is your chance. Otherwise, thank you so much.
No, I appreciate it. I think just a couple of things: read your policy, document, and continue to have that ongoing conversation with your insurer.
Thank you. Dawn, any closing thoughts?
I would, no, I don't. I just thank you for the opportunity to be of help to everybody here. And wish you all the best.
Thank you so much. And again, this recording will be available on our website. Please let folks know that it's available. I think, we really took a lot of time to put together what we know to be the most common challenges and issues. And we're just really pleased that to be able to bring you this information. So thank you again, Amber, Don, and Alexis. And good night, good evening, and good luck. We're rooting for you.